Welcome back to the final segment of Investing and Trading Live on this beautiful, beautiful day here. We have a good time in studio talking about the financial markets, and we try to make this relatable to most people. And we've been having really a sports theme here today. We talked about some football, the Vikings, the Broncos, how they practice. We talked about arguably the greatest basketball player of all time, MJ, Michael Jordan, or Air Jordan, however you refer him as, but
Mhm.
phenomenal basketball player. And he said he was coachable. That's why he was such a great player. He was willing to learn how to hone his craft on the hardwood. Now, we have these investing classes to introduce people to some of those characteristics that we're looking for. People that are coachable, people that can have a little bit of discipline, people that can be decisive in the markets, because that's all some of the characteristics that you really need to be successful in my mind. I mean, usually you have to have a strategy, which we talked about in the first segment, but you got to be able to follow that with some discipline. And that's with the right guidance, we can help you get there. So if you want to see what those strategies are, those concepts and those characteristics, we'll be able to go through those with you in these free investing classes that we host here local at our academies. We had a lot of people texting in for during this show. Congratulations to those people that really took that first step. Sometimes taking that first step is tough. Congratulations to those of you that did. For those of you that still got to do that, make sure to come into one of these classes. We have phenomenal classes. They're about 2 hours. You can text the word investing to the number 210 just to see what it's all about. If you want to improve your financial future, well, you have to find out what you might be able to do a little bit different. So, continuing that theme, Al, about professionalism. Michael Jordan was a professional. I really like Tom Brady. He is a professional,
Mhm.
and he didn't start. Neither of those guys didn't start as a professional.
That's
Matter
right.
of fact, if I remember right, Michael Jordan did not even start right away for North Carolina, and Tom Brady was what drafted. Gosh, it's a stat that everybody knows. It's on the tip of my tongue, but very very low in the draft, right, or very
Mhm.
high. Which round? It was one of the later rounds in the NFL draft. And there was actually an article that was out there. I forget where I saw that, but it was something about the stock market is not for just the rich or the professionals. And that's what a lot of people think, Al. A lot of people think you have to be rich. We covered that in the first and second segment. You can use leverage in the markets to trade and invest with less capital than you might think about with stocks. And a lot of people think, oh, I'm not a professional. I don't know. I need to trust professionals to get in the markets. Well, you can't become good at something unless you start. And then you have to learn how to do that. Be coachable, like MJ said. Be coachable, like Michael Jordan was.
Mhm.
And then to practice. And that's what we talked about in the second segment. Once you have a strategy, you have to practice. And that's how you get better and better and better. So you don't have to start there. Quite frankly, you don't even have to end there. If you want longevity, you just need a strategy. And that's what Online Trade Academy has developed on their 26th year, teaching people how to trade and invest. So I'll kind of walk through what that journey looks like and how to be successful or consistent. Let's just say consistent in the financial markets.
Well, I think it starts, Josh, with identifying who you are, how unique you are in your character and also what your goals are. What, again, as I mentioned earlier, what do you want your future to look like? What does your financial life need to look like in the future? If you can't identify that or you don't identify it, it's going to be hard to be able to use the right assets and strategies to get from where you are to where you would like to be. So identify that. Let us put a plan together for you, or help you put a plan together that shows you what the rate of return is that you need to get to where you want to go. It will be different for different people. It might mean for some people being really extremely conservative, and for some people maybe being a little more aggressive. And I almost hate to use that word because I know people are going to cringe when you hear the word aggressive and you think, well, that's too risky. The number one thing that we're going to concentrate on is risk management, how to make sure that whatever you're doing, you first, before you even enter a trade, you know what the risk is, you know what the potential is, and you know how to control it.
By the way, when you brought up a great point about aggressive, not to put brokers or advisors down or anything, but what they do is they say, do you want to be an aggressive or non-aggressive,
Right.
risky or non-risky? What the heck does that really mean even? It's just a term. And
Yeah.
it's a term to make people feel comfortable. If you say, okay, I want to be less aggressive, you feel comfortable to give them your fortune, all your money. If you will say, oh, I want to be a little bit less risky, you're comfortable to give them all of your money. And now they just won you over. So it's a thing, it's just a term. You always want to have low risk, small, high reward in the markets. Aggressive is just a term. You can be aggressive or not aggressive. It doesn't matter. That's how they get people reeled in to give them their hard earned money.
Yeah, and you made a comment earlier. You said the market is just not for professionals or rich people or professionals. We actually use the professionals. Let them do the work. Let these guys put all the money into researching things and hiring people that they're paying millions of dollars to figure things out. And then we just basically shadow off of what they're doing because they can't participate in the markets without letting us know it in some way what they're doing. So the important thing is being able to identify when they're doing something so you can be there with them. And then what happens is that the rest of the public, the emotions of the public kick in, they jump into something or exit something, providing more movement, which is basically more profit for you. But you have to be able to, first of all, identify, as I mentioned earlier, the right price to get into something and the right price to get out of something. The Wall Street, the advisors are just going to tell you no matter what the timing is, just to get in the market, put your money in the market. How would that have worked for you if you did that at the beginning of this year? Well, you would have lost a significant portion of what you put into the market. You know, Josh mentioned earlier, and I just want to comment on this, over the last, what was it, like 12 years?
22.
12 years or so, 12, 13 years, that the market's been up about 160%.
No, that's just 2000. That's 23 years.
Okay, what if you went back to the year 2000? Let's go back to the year 2000. So you got 22 years,
Yep.
and the people that bought and just held on and rode through the downturns are up maybe about 150% during that time period. But during that same time period, there was a 4-year period where the market was up 100%, and then over a 10-year period where it was up over 400%. Yet, if you bought and held, you were only up like 150%. So
Yep.
why?
About 440%. Actually, no, 400 and from 2009 till 2022, 552%.
Okay,
Al.
so it's 522%. But most people, if you're lucky, are up maybe 150%. So how did that happen? It happened because you've bought into that holding on during corrections. We had 2 corrections of over 50%, one in the year 2000, one in the year 2008, or 2007 to early 2009. And then we also had a 34% pullback during the COVID issue.
Mm-hmm.
So those are the pullbacks. That's what really hurts the overall returns that you can have.
And missed opportunity.
And missed opportunities, because when the market's down 50%, some people are up 50 to 100%. How does that happen? Well, they know how to participate in a market regardless of the direction. Most people are only one direction, that's up, but you're missing out on more than a half of the opportunity to benefit yourself financially. One of the things that we talk about and really concentrate on in these classes is how to benefit in a down market and how not to miss out on that. The people that are really successful, they make money during a bull market, then they protect that money, but then they also make money during a down market. You can use the same things that they're using. Why aren't you being taught about them? Well, maybe because you haven't been to the Online Trading Academy,
Exactly.
and maybe because Wall Street doesn't want you to. They want to make sure that what they're doing requires the least amount of work for them with the greatest profit for them. And then you kind of fall right into that plan.
Yeah, for those of you that are on the YouTube stream live here today, or recorded, I got the charts up right here. You can kind of see the difference of what the rate of return that you're missing out of on over the past 20 years. Just great returns if you know what you're doing.
Sure.
And that's one of the great things about Online Trading Academy is we show you these different opportunities so you can see what the possibilities actually are, how you can make smarter investing decisions based on what you need, and then just doing that with consistency and confidence. That's what it all comes down to. And just another, I want to paint a picture. You know, you mentioned, buying and holding it and keeping it for the long haul with no plan of gain or loss.
Right.
That's like jumping in your car. Let's just say you're in South Dakota and they say, go somewhere warm. You may go south, but where are you going to go without a plan? You don't know. That's just then you're going to drive in circles until you find the right spot and say, "Hey, now is the time I want to stop." Well, where are you going to be in Albuquerque? Are you going to be in Florida? Are you going to be in New York? Are you going to be in Denver, Colorado, Minneapolis, Minnesota? You don't know, so that's why you need a plan before you get into your investments. Don't just go for the long haul. Have a plan for up markets and for down markets. We teach these concepts in these investing classes. They're a lot of fun. Great time talking about the stock market in these classes. They're about 2 hours, local at academies. Come right now to one of these classes by texting the word investing to the number 210 210. That's text investing to the number 210 210 right now. Al, hit them up with words of wisdom.
Well, Josh, we see a lot of people that they just accept where they are and feel it's due to bad luck or circumstances they couldn't control. Just remember, we're not given a good life or a bad life. We're just given a life, and it's up to us to make it good or bad. Charlie Munger, who's Warren Buffett's right-hand man, said this. This is a quote: "Those who keep learning will keep rising." End of quote. Knowledge is an asset that compounds over time. The more you know, the better you think, and then you make better choices, and that's going to allow you to achieve better consequences. If you want to do anything, though, you have to dedicate the time. There's only 24 hours in a day. You can't make more time, so use your time wisely.
Kind of made me think about that term that the kids are saying. They say YOLO, you only live once. That's actually incorrect. You live every day. Live every day, have the fun, have a good life. Hopefully you have a good financial life, and do that with confidence. Learn more about those strategies by texting the word investing to the number 210 210. As always, same time, same place next week. Until then, retire young, my friends.